Hi, and welcome to Market Week in Review. My name is Alex Kersley. I'm a senior investment strategist based out of Sydney. I want to talk today about three things. So the first is the US inflation outlook and the US inflation print that we got. The second is the start of US earnings season. And the third is what is going on in China, particularly around the credit numbers that we got this week. So if we kick off with US CPI, so we've talked before in previous episodes about the fact that US bond yields have been rising quite a bit since December, on the worries about more inflation and what that could mean for interest rates going forward. We got a bit of reprieve this week with US CPI coming in slightly below expectations. So US core CPI was 0.2% month on month. Expectations were for 0.3%. So a welcome reprieve. And we saw bond yields move quite aggressively on the back of that and are now sitting at 18 basis points below where they were before that print. We still think that US bonds look fairly attractive on valuation, and going forward, we think that they still have a very strong place in a multi-asset portfolio. If we move across to equities now, we've seen global equities as of Thursday close up about 2%. One of the key things that's come through is the start of earnings season with the banks reporting, and generally it's been a pretty constructive environment for banks through Q4. We've seen most of the banks deliver better earnings than expected, and in the case of some of them, announcing quite large stock buybacks. So that's, again, in the outlook that they have given is an improvement. So that has been encouraging on the financial side, and we'll see what rolls through for the rest of the earnings season. Expectations are fairly robust at about 5% if you strip out the Mag 7 or the Magnificent 7 tech names. And then finally in China, so close to my home, China is still stuck in this fairly soft growth environment where you have the property drag and soft consumer confidence. That's putting the economy into risks of deflation. We've seen some very soft inflation prints. Since the start of December, we've started to see some pickup in property transactions. So China has been trying to encourage more property transactions over the last 6 months. And at least in the very near term, it looks like we're starting to see a bit of an improvement there. It's probably too early to say that it has completely bottomed out. And on the back of that, we saw credit numbers this week showing a very small tick up in mortgage lending. So there has been a little bit of an improvement in mortgage demand. Looking ahead, though, I think the key focus is going to remain on what happens with government policy. Do we see more announcements of stimulus? We're coming up to some pretty big meetings, including in March, we have a meeting of the National People's Congress where we will get likely the growth target for the economic growth target, as well as the other watch point is what happens with the new US administration in terms of tariffs and how China responds to them. So there is a couple of small green shoots for China, but generally the focus is going to remain on stimulus. And I think that's going to be the big focus for our region this year. So thank you again for tuning in. We look forward to seeing you next time.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.